Good afternoon, everyone. Markets were shaken overnight after US producer prices for August came in weaker than expected. That triggered a sharp repricing in rate expectations, with traders now almost fully pricing in 3 more Fed cuts before the end of the year. The August PPI rose only 2.6% year-on-year, which is the lowest since June, which fueled those bets for further easing. Political headlines also added to the mix. A judge blocked the removal of Fed Governor Cook. The Labor Department's Inspector General announced a review of how inflation and jobs data are collected. And Fed nominee Milan cleared a Senate committee setting up a full vote next week. Turning to gold. Momentum has been impressive, up more than 11% in just 14 trading days. But yesterday's daily candle printed a shooting star, which is a potential reversal signal. And first support lies at this week's low near 35.60, followed by 35.37. Stronger backing comes in around the 20-day moving average near 34.40 to 34.50. The bigger picture is still bullish, but the weekly close is critical. If gold fails to hold about 3,600, last week's breakout could be undermined. In oil, geopolitics are back in focus. Russia launched its largest attack on Ukraine since the war began, with drones fired into Poland. Despite that escalation, heavy Russian exports of discounted fuel have kept the prices. And technically, WTI is showing signs of slowing downside momentum. Bulls need to defend 61.64 with resistance at 64 and then 66 to 67. And on the downside, the $60 mark remains the key floor. And finally, in forex, attention shifts to tonight's US CPI report. Headline inflation is expected to be 2.9%, core at 3.1%. A softer reading, like PPI, could revive speculation of a larger 50 basis point cut. The Australian dollar is worth watching, pressing against a 10-month high at 0.6625. A breakout here could see the pair extend gains towards 0.67 and beyond. So that's it for today's review. Thank you for watching, and all eyes now turns to tonight's CPI data. Thank you.